Hello guys, welcome to the Daily Crypto News Show. Crypto Lemon speaking. Today is October 12th and we're going to talk about Bitcoin. Some Satoshi coins era have been moving lately. We're going to talk about the state of the market and a lot of things to take into account. We're going to talk about this rumor of an Bitcoin ATM in the Tesla Gigafactory. And to close this daily crypto news show, we will talk about DeFi governance token that face mostly three challenges out of many others. First thing first, state of the market, 362 billions. Bitcoin has been going down over the past 24 hours, almost 1%, 11.267K. And we have also Ethereum retreating under $370. So what do we have? So this is a cool article from Cointelegraph, basically showing the 5 current things that could impact Bitcoin in the short term. So of course we have the US election coming up. Lately, I think the current drop is due to the fact that Democrats are not agreeing with Trump's proposal of $1.8 trillion stimulus. They want more, and Trump publicly said he didn't want to go over 2 billion, so we'll see what happens. Also, financial markets are kind of worried of a blue wave all over the US, as Joe Biden has been quite vocal. He would like to raise taxation and will probably increase spending. So raising taxation is not good for Bitcoin, but increased spending is good because it will mean more devaluation for the USD, and therefore this graph could go down again. And if we look at when the dollar currency index was at the bottom or almost at 92 against another basket of currencies, it was the all-time high we had this year when we had the bull run in September and the Bitcoin just exploded up. So if we have this indicator going down, it should help Bitcoin in the short term. So we have also Brexit with the UK that should finalize its Brexit proposal. The thing that I've been hearing lately is that it's not ready and they might ask for another delay, but it's supposed to be a deadline actually. So we'll see what happens. We've seen also that S&P and Bitcoin have been moving a bit together, as they both will benefit from a $1,200 stimulus package for every US individual. Good metric, hash rate is at all-time high. This was kind of expected, but this is very good for the long run. It just means the network is secured, and so this usually is an indicator that is before a new all-time high. So quite cool indicator. And finally, sentiment consolidates. So the crypto fear and greed index, I'm pretty sure you know what it is. It rates the sentiment in the crypto space from 0 when it's extreme greed, fear, to 100 when it's extreme greed. So we were during August and September really in a bull market mood and a greed mood, up of 70 and close to 80 most of this period. We've went down since the beginning of September, and we're now in the 40 to 60 range, which is good because it means we kind of calmed down, and the Bitcoin price actually stayed quite up. So a lot of people are seeing a lot of potential, especially when you think that Bitcoin did not go down on the BitMake news, on a KuCoin hack, on today, we're gonna just talk about it, on the fact that $11 worth of Bitcoin from 2010 just moved. So this is crazy. So this is a trader called Kirill K who spotted this. They bought it, or at least it was worth less than $100 back in 2010, and it seems these bitcoins were mined during the Satoshi-era and were held on a wallet. So they don't think it's Satoshi that moved them, but it's just asking the huge Bitcoin whales to be careful when they move the tokens, because it could really create a panic for all us little Bitcoin holders. So nothing to worry about, I think, but we should monitor this and understand where they do come from. A rumor that looks like a fake news, so I'm just gonna talk briefly about it. Elon Musk played down sighting of Bitcoin ADM in Tesla Gigafactory. So somebody tweeted his name, I'm not gonna even say his name, but a journalist that he saw Bitcoin ADM in the Tesla Gigafactory. So he spotted it on Google Map and shared a picture, but quite rapidly Elon Musk replied to this tweet saying he does not think there is a Bitcoin ATM in the Tesla Gigafactory. So and after this, the guy that tweeted basically deleted his tweet. So it looks like just kind of a fake news. And something important for DeFi governance token, they face 3 big challenges. So we've all heard how crazy people are about DeFi. It seems it's calming down, and even returns are calming down. People are calming down, and they rather now invest in long-term projects instead of all these pump and dump. So they were talking about, you need to look at the concentration. Who holds the token? Where is the contract? How much, what percentage does the, let's say, main holder, usually the team or the funder or co-funders, hold? But this is not the only thing you should look at, because at an early stage it is normal, and it should be the case that most of the funding team retain the token. You should also look if there is multi-signatures or other things that could really protect your investment. As the more, let's say, notorious parties involved, the more security you have. It's never 100%, as you all know, in the crypto world. But if you have a bunch of active and well-known players or companies in the crypto space that are multi-sig of the main contract of this DeFi governance token, then it's quite nice. It's quite nice. It brings some security, and personally, I'm really looking to this type of datas. Problem 2, yield farming. So this was a big thing, as what they were saying is that if you have a token or compound token or all this kind of governance token, you can yield farm with them. But what happens if you lose your money and the tokens are locked in the contract where you borrow money against them? It means that the governance will not really work out. So I have implemented something quite interesting called the protocol safety module to help secure the protocol. They say in the case of a shortfall event, up to 30% of the stakes can be slashed to cover the deficit. In exchange for securing the protocol, stakers earn staking incentive in the form of AVE. So this is something that I think will be in a lot of the protocol. And problem 3 is, how do you incentivize founders to stay? We just see with YFI, which I'm a bit critical about. We saw with SushiSwap that finally came back. We see that a lot of these founders just are thinking of running away with the money, as they probably won't make this company bigger or make more money in the long run. It will be really difficult, as you'll need to really establish yourself as one of the few leaders in DeFi in the next 2-3 years. So what they do is, you can look at the token locks. You can look at a bunch of things like multi-sig token lock or other things to make sure that the founders are incentivized. So these are 3 important elements if you look for DeFi governance tokens that I will think you should look at. So this is all for today. I'll see you tomorrow, guys, and until then, stay safe.